Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 28th, 2017. I wanted to go over XLP, which is the Consumer Staples ETF. Just touch on that sector. That sector makes up close to a 10% weighting in the S&P 500, so a fairly significant sector to monitor. One that's sort of an enigma because it's well off its highs. Right now, and there's a lot of that has to do with the fact that this holds the majority of these stocks are dividend paying stocks, high yielding stocks. As we know, rates have ticked up recently. And so therefore you're going to see some selling pressure and profit taken in the dividend names. But either way, there's just a lot of charts that jumped out to me when I was going through the holdings of XLP last night. I'm not going to go through them all. I won't flood you with charts today in this video. We'll only look at less than a dozen names. Here's a listing of the components of XLP, and they're sorted by market capitalization, with Walmart being the largest at about $237 billion. And I'm only going to cover, I'll go down to Constellation Brands, so that's about a dozen or so, but I won't even, I'll exclude a few of these names where the charts don't really stand out to me um, as compelling. So therefore, we'll cover maybe 10 at most. Let me just start with XLP, tell you what I see. I know this is a busy chart. I'm just going to tell you what I'm focused on. I've had these lines here for a while. You have minor trend lines and all that. But the white lines here, for example, you had an uptrend line here. You had divergence. This line up top, this white line, the uppermost trend line, shows you the negative divergence. And this would have been pointed out at the time. So there was your uptrend line. There was your breakdown right there. And that led to a very healthy correction in the in XLP. And that was preceded by a divergent high. And this will be a common theme in this video. I want to show you that, again, I know there's people that have given up on, almost given up on technical analysis and things that have worked for years and years and years. Divergences are one of those. As you guys know, it's one of the most important components of my analysis and my trading. And as I always say, there is nothing that works 100% of the time in trading or technical analysis. But this is one of the best indicators that I know of to give you a heads up for an impending trend change. And statistically, hard to say. It varies in market conditions, but I would say it works well over 80% of the time, if not more than that. So there was a divergent high breakdown, and that was your sell signal, and there was a nice correction you could have caught. Now, I made note right here. For example, here's an instance where we had positive divergence, where this red line is, price is making a lower low, and the PPO as well as the RSI making higher lows. That's bullish divergence. It did play out for a little pop, but on the daily time frame, you typically see more. So this, I colored it red because that's one instance of a failed divergence. Now, again, you look at, I always say divergence in itself is not a buy or sell signal. You need to see some type of chart pattern breakout, trend line support break, something along those lines. And in this case, what happened? Prices continued lower, and although the divergence at this point failed, and we had another thrust down, about a 3% or so drop from that level, we did have bullish divergence on the RSI. And although I prefer to see divergence on more than one indicator, many times you'll see a reversal come with just one of the indicators down below showing you that bullish divergence. So you can say it failed at that point, but it went on to make a slightly lower low and then played out for this big rally here. Everything came full circle. You can see very clear divergence. And as I often talk about, I even did a post last week in detail about divergence because I had a question from a new member on the site. And I like to see clean separation in the lines like this, where you have a peak, a nice trough there, and then another peak. We didn't really have that here. So this is a type of divergence I really like to see. Nice clean peaks, equal or lower highs when you see negative divergence versus price making higher highs. There's your trend line. There was a break. And you can see that unlike the broad market and many sectors out there, there's something going on with the consumer staples. They're already down over 6% off their highs. So this is just something that stood out to me. I've been watching this sector, watching the relative weakness, and now I'm noticing this, what I call unconfirmed positive divergence. In my book, at least, it's unconfirmed and only would be confirmed if and when we get a bullish crossover here on the PPO, that blue line crossing above the signal line, the PPO line going above the signal line, and that needs to occur as long as we have either an upsloping trend line here on the PPO or at least flat, because you can see prices if they continue lower, you can have divergence look like this or anywhere. So I'm on the lookout for a reversal. And I can tell you, I have a support level here about 53.60ish, and I favor a reversal, on or around that level. So we could get one at any time. This PPO can curl up. So here's the thing. Uh, the charts are a little bit mixed here. So I'm going to go through just a handful of components here. There's some that I'll probably add as longs, even take personally. There's others that look like are ripe for shorts right now. But overall, um, there's quite a few long trading ops or potential long trading ops here in the sector, and maybe even some shorts. And that's why I'm doing the video. They all won't make it on the front page as official trade ideas. So as I've said all year, some of the best trade ideas, the most profitable ones this year, have come out of these videos where I can't possibly put them all on as official trade ideas, and just clean that trend line up a little bit there. So hope you guys find value in these videos. Now, this is what I'm looking at. Divergent low on a sector with market near all-time highs. This one's outperforming, so at the very least, you probably have very little downside. I mean, if things get ugly in the markets, we could come down all the way here to this 51.50 to 51 area. I could see that possibility, especially if these divergences are burned through, because that's quite bearish when you see potential divergences setting up and then you see them burn through. So something to look out for. One other take on this, I have an alternative view, head and shoulder pattern. This is what I call, or what they call, a complex head and shoulder pattern. You have a couple peaks, maybe one or two or three left shoulders, two or three right shoulders here, but it just has the essence of a head and shoulders pattern. This would be your neckline right here, and then to gauge how far the measured target for a head and shoulders pattern, you take the distance from the top of the head down to the neckline, and you add that to where the pattern breaks down, and you can see it comes in right just above this reaction low, which would be a natural price target anyways. There's the divergent high that we had, and that's a pretty powerful divergent high on the daily chart. Again, I had that drawn out on that other board that I just showed you. Same time period, 2-year daily chart. So there's a negative divergence. So something else to watch out for. And if that plays out, then obviously those divergences would be burned through. All right, let's rifle through these components real quick, and we'll wrap this up. Walmart. First up, again, the largest at least by market cap here. This one looks more bearish than bullish to me at this time. You have negative divergence on the RSI. You almost had flatline divergence here on the PPO, but it looks like PPO made a slightly higher peak. You can split hairs. It almost has the essence of divergence. Virtual equal highs on the PPO versus higher highs in price. Either way, those divergences, at least on the RSI, are playing out so far for a correction. At the very least, I think Walmart needs to come in and test this trend line again. And you also have this gap area back here. So there's a support zone right about here. So what you're looking at Walmart, you can take it glass half full or glass half empty, however you want to trade, whatever your views on the market are. I see a very significant support level here with both price support as well as trendline support. You had these divergences that may or may not have played out for all they need to. So those looking at things with the glass half full, you want to go long on a pullback to these intersecting support levels. Those looking at it glass half empty, in other words, a more bearish outlook on the market, or at least on Walmart, you want to wait for a break of that level, and that would probably take you down to at least this reaction low right here, if not that trend line that I have there. That's Walmart. For those of you new to the site, you've seen a lot of short trade ideas lately. I'm not seeing very many objective long entries despite an uptrend. That doesn't make a difference to me. I look for objective trades with minimal downside if stopped out, compared to at least 3 or more times that in profit potential on the trade setup. And again, as well as objective entry. By objective entry, I mean a pullback to a support level on a long, or a break above resistance, or anything along those lines. Now, this was Walmart just last year. We had this as a long trade. We nailed the bottom on this one. We were right in here at the lows, give or take within a percentage point or a couple percentage points. And I guess these were the 3 targets back then. that was a growth and income trade, which is a trade that's usually intended to be held for a longer period of time, and also a stock that pays a dividend. It looks like about a 25% run up to that third target. And then you can see how well the technicals work on this stock. It's just a beautiful chart. You have a very clean, well-defined downtrend line. You had the divergent low. The reasoning behind this trade was also based on the weekly chart, but you can see all those targets were hit. We had a little false breakdown there. We snapped back in this bearish rising wedge. Then the bearish rising wedge pattern broke down. It's very well defined, other than that one little spike, and I don't mind excluding one or two errant candles as long as there's a lot of reactions on a trend line. That played out for a correction. Then we moved back up, and now, again, I had to go to a 2-day period to encompass all 4 years of trading on this charting platform. That's a limitation. I can only go back 2 years on a daily. So here we go back to today. There's that divergent high and everything I just covered there. So that's Walmart. And as I said, that last trade was based off the weekly chart as well. We had these overbought readings, everything. You can just use the ticker by symbol on the front page and read the notes on that trade. But it shows you that technicals do work. And here's a weekly chart showing you the negative divergence showing through. For the first time in years, we have negative divergence on the weekly time frame. What that tells me, when you have negative divergence on a 60-minute chart, or positive divergence for that matter, you're looking at a trade lasting usually weeks, somewhere in that range, maybe a couple months, sometimes days on the 60-minute. When you get out to the daily time frame, the divergences and the chart patterns project a longer time frame on the trade, weeks or months there. And when you get to the weekly charts, those are usually trend reversals lasting weeks once those sell signals or the divergences manifest, or the sell signals are triggered, or buy signals, either way. PG, Procter & Gamble, another big, beloved blue chip company. All these are blue chip companies in here, at least these top ones that I'm going through. Very clean chart, very clear wash, rinse, repeat trading. You have an uptrend line. You have negative divergence. You can see it drawn here. You can see it on the PPO. Divergent high, correction. Stock moves up because it's in a primary uptrend. We've come full circle. We have very clear divergence, unmistakable negative divergence. Prices making a higher high. And you can see the peaks on the PPO, lower highs. Same with the RSI. And so here's one that started to come back in following the most recent divergent high. Trend indicator still bullish, so I don't really. For the most part, I'm not a huge fan. I will short anything if I think there's enough profit potential, but I try to stay clear of low beta dividend paying stocks. By low beta, I mean stocks that don't swing very much in price and paying a dividend. Because even if you're right on this trade and it walks its way down to this trend line, ultimately breaks it and goes down here, this would be my target, at least my minimum target, $86. But here's what you're talking. You're talking 5.63% to get there. Let's say it took you 5-6 months to get there. The stock's yielding 3%, so you're going to pay half of that dividend by being short, which eats into your returns. So you see, it's just not worth it in some of these stocks. I'd rather go long a lot of these blue chip stocks. Trend indicator still bullish, but again, that's a pretty powerful divergent high, and I do think there's more downside to come. So I'd just avoid that one for the time being. Here's KO. This is Coca-Cola. You can see same story. It's not all drawn out here. Some of these charts cut off to the left, but there was divergence. That was a divergent high. There was your breakdown. From the divergent high, Coke dropped 15%. That's one of the world's biggest, most popular blue chip companies out there. And there's a 15% drop during this Super Bowl market, quote unquote, that we're in. There's plenty of money to be made on the long and short side with just about any stock. As I say, trade stocks, not the market. That was a double top high too, which has longer term bearish implications, potentially, this double top. And here was a pretty clear uptrend line, rising wedge, negative divergences, and this one just recently broke down. So, I missed it. This was a pretty powerful sell signal because we had a clean up trend line, we had horizontal support, we bounced down, hit that support, back tested. This is perfect technical analysis. TA 101, back test, and then an impulsive move lower. There's a little support down right about here, and we virtually hit that now. So, unfortunately missed that one. But if you ask me, I think it's going down here ultimately. May have a little little more upside now because it got pretty extended. You can see it overbought down on the daily chart, so I certainly wouldn't short it here. You can maybe game it long up for a small bounce there if you want. Or if you think the market's going to the moon, go long, buy pullbacks to support. But I certainly wouldn't hold this one for much longer because I think it's going down over time. There's a weekly chart, and don't ever lose sight of the big picture, guys. On the weekly charts, here's that double top high. Here's a trend line to watch. Negative divergence. I haven't really updated this chart in a while, but there's a price channel, and just watch for a breakdown below that price channel. PM, Philip Morris, there you had a divergent high back in 2016, and you had a healthy correction. This is a nice dividend paying stock, defensive issue. People keep buying their cigarettes during recessions and boom and bust times. 17% drop off that divergent high, and that terminated with a divergent low, in which you have a small divergent low and a big rally afterwards. And that's because the primary uptrend is bullish. You can expect this to happen in reverse once all the trend indicators flip, and they're far from there yet. But there will come a day in the not too distant future where you have our longer term trend indicators flip. We're already well into the second longest bull market in history. And once that happens, you flip all this around in technical analysis. When you see divergent highs, they're going to be good for much deeper corrections. When you see divergent lows on the daily chart, certainly you can position for a bear market rally. And I love trading bear market rallies because they're just like I love shorting stocks, whether it's in a bull or bear market, because the bear market rallies are very fast and furious. Now, this was a bull market rally. It was just a correction within a longer bull market. But there it is. Came full circle, went up here, had a divergent high. You can see it very clearly down below. And this one's only starting to roll over. So I think it has more to go. It's only come down about 10%. I say only, using that relatively speaking, but that's a pretty good move for Philip Morris. But I think it comes down here to at least that 109.30-ish level, and quite possibly back down here again. And remember, keep the bigger picture in mind, the long-term charts. I don't have this one marked up right now. Pepsi, divergent highs, two consecutive divergent highs right here, and that divergent high's already started to play out. Now, what I've done here, now this one looks interesting actually as a bounce trade here. And this, I told you there'd be some long trade ideas in here. I'm not bearish on all of these, at least near term. You got to define your time frames too. I might talk about a longer term bearish picture, but a near term bullish outlook. That's what I think is the case with Pepsi. I've circled all the overbought readings in the last 2 years down below, and you can see without fail, without exception, you had very nice rallies off each one. Even this might not look like much, but I'm sure that was, well, let's see, we can see from, about 1 up to 100 and 110. That was probably, I don't know, 6, 7, 8% rally. There was another one, as you can see, very profitable to go long on these overbought readings when the RSI crosses down below 30. I don't see any bullish divergence, so I would only be looking for a counter trend trade. I would probably be looking for a move. I'll tell you where I'd be looking for it. Right up to about this level, I see some pretty decent resistance. So if you want to game this one, you're looking for some long trade ideas, you can go long below, what is that, yesterday's low right there, I believe, that red candlestick. You go long below there for a bounce up to that level, somewhere around there, and then quite likely a resumption of the downtrend. And depends again how you look at this market, how much more upside you think it has. You could also go low and just trail your stops or place a stop, at entry, and let it ride, and maybe that correction is just a shallow pullback, despite what the charts are saying. Let's just take a look at the weekly charts for you. Okay, this is interesting, and I think this, paints a different picture longer term, or helps paint the longer term picture, I should say. Here's Pepsi. This is a 10-year weekly chart. So what we're looking at, you can see this uppermost trend line just really shows you the divergence. If I really want to continue it from where it started, you have to do this. You have to draw another line. These are two consecutive lines showing that divergence. This is our primary uptrend line. This might even draw all the way back. It should draw all the way back to the 2009 lows. So this is a very well defined bull market uptrend line. That's from the when the bull market began back in March of 2009. We have numerous reactions. It's behaved very well. We had a flash crash there. Exclude those errant, huge, giant, candle. That's a huge tail or shadow on that candle. Snap back up to close the week above it. So that's technically insignificant. When I'm looking at a weekly chart, I exclude candlestick shadows and tails. I try to capture the most bodies and/or tails within there. But that is a on a scale 1 to 10, that's close to a 10 for a trend line. So this is your bull market uptrend line. When that trend line breaks and the divergences indicate that sooner or later you will, and because it's a weekly chart and these divergences span years, that tells you of a trend reversal that's not just going to last a few weeks or a couple months, but many months, if not years, once that trend line finally goes. So there's the bigger picture. But until then, when you zoom in a weekly chart, there's a lot of play. Just to come down and visit that trend line again, that's another, about 3%, and then we probably get a reaction off the initial tag. We haven't touched it in months. So, you can play around with this as a swing trader. You can go long or short, and until that level goes, and then once that goes, we'll probably be in a primary downtrend in Pepsi, and at least it'll be safe to say. I mean, the top may already be in at this point, but we won't know that until hindsight, until once that level goes. So there's Pepsi, and again, looks good for maybe a little bounce with a stop not too far below. I'll have to look at the 60-minute charts. This video will get too long if I spend if I flip over to any other time frames that I'm going through right now. I'm just focusing on the daily and weekly, but I'll look at the 60-minute charts, and any that stand out as very compelling, I'll put as official trade ideas for you with some price targets and stops. There's Altria Group. That was a spinoff of Philip Morris years back. There's a divergent high right there and a correction again. This is a blue chip stock, about a 13 or so percent correction. Another divergent high. Again, point being the technicals do work. These divergences do play out. There was a divergent low right there, just as we had a divergent low here. I don't have them all drawn out, but there's a divergent low. There's your divergent low against this point, and you can see the stock put in a double bottom from there, tested that low once again and rallied. Divergent high. It's that simple. It really is that simple. They don't all work out. And again, align these divergences with buy and sell signals. I wish I would have seen this very tight. Look how well defined that price channel is. That's program trading to walk a stock down in so many reactions along that trend line. Such a well defined price channel. Divergence in place. Boom! It popped. Looks like about maybe a week or so ago. Pulsive buy, or pulsive candle through there. That was a buy signal, and it went up a little more, and it'll probably continue up to about that 66.09 or so level, at least that far. It may be more. That's bullish divergence on the daily, but bigger picture is the trend indicator is bearish now. So, we may come up here and fail there. I wouldn't touch it right now. Let me not spend any more time on Altria. This one I like, KHC. Somebody in the trading room asked my opinion on it not too long ago. I don't know if it was here, somewhere back, and I thought it had more downside. I pointed out there was a support level here at 80.19. You can see we did bounce off it, and we've since set up in this bullish falling wedge. And at the time, I think it was a few weeks back, I said this is my support / likely reversal zone where I favored the stock continuing down to. So far, it has come in with just a little bit above that level. That comes in around 76.70 down to about $75. And you can see bullish falling wedge. Right now, we have potential divergence in place. It'll be confirmed if the PPO makes a bullish crossover. There's divergence on the RSI. So this one, you can either buy down here in the support zone, or I should say, you can add to it or open a position on a break of this downtrend line / bullish falling wedge pattern. And the levels that were support on the way down, once support's broken, they become resistance. So these are likely targets. That one is at 80.19. And again, if I decide to make this an official trade idea, it is certainly one that I'm more bullish on than bearish on. Might have a little more work to do. Again, I have to scrub the 30-minute charts, 60-minute charts, and see if I can confirm an entry before it breaks out of here, because I do like to catch things at the lows, sometimes at the bottom of a wedge or at support, and that gives you, sometimes a 5-10% or better entry price than waiting for the wedge to break out. And again, when you buy it at support, you can put your stop not below, and that's another reason I like to do that. You have very little downside, even if you get stopped out. So you take a shot at 5 or 10 of those, even if only half of them work, it pays off. WBA, I don't see too much there. CVS, I don't see much there now. I remember doing a video, I'm sorry, maybe it was a static post about the pharmacy benefit managers, PBMs, back, and this one I highlighted CVS. So I think it was before the trend line broke, maybe after. Either way, you can see there was that primary uptrend line breakdown back test, and it did move lower. It exceeded my first target, hit that second target there, and it's been trading between the two since then. But right now, charts look like a mess. We had a false breakdown from the symmetrical triangle, then a whip back up, and then a false breakout, fell back into the triangle. I stay away from stocks like this. There's something going on there. The trend lines were pretty clear, and this thing's just whipsawing both the longs and the shorts. Costco, COST, divergent low, divergent low. I missed the boat on this one, but I just want to point that out. So like I said, the theme here is a mixed bag of bullish and bearish technicals. This one had a divergent high here. You can see the negative divergence. We had a pretty significant resistance level here. Broke above this, proved to be a false breakout. We fell back in here. So the bigger picture, and you can see it really, if you look at this chart, Costco's just slogged around in a big sideways trading range for the last 2 years. So when I see that, I go out to a weekly chart and try to see what's there. And you can see here this was the initial primary uptrend line, rising wedge, breakdown, correction, and then it's really worked its way within this larger, very large range right here, this chart pattern. So you can either buy it on dips down to this uptrend line here, or you can wait to short a break below that level. Or if you do buy it here and you want to know where to sell, well, certainly next target would be those previous reaction highs where that horizontal line is. And now this is concerning. I talk about using the PPO as a trend indicator, and that works on any time frame. And I also, to say that, I look at each stock. If I see a PPO that's just crossed through, whipped through, like it's not even there, I'm talking about the zero line, the dotted line in the middle, I ignore it. But when I see one that has behaved very well, and if you're not familiar, I use this line, the EMA, the 9 EMA, the signal line, which is the white line here, the last of the two to cross. As you can see, throughout this entire bull market, I should say since late 2009, the bull market really technically began at the lows here in March of 2009. But since then, once we made a bullish crossover, that zero line has worked nearly perfectly as a support level. Every time that white line, the 9 EMA, has come back in, it's found support. And so this has kept the trend bullish throughout the entire bear market up until recently. So that's pretty significant. You can see there was one little whipsaw. Like I said, nearly perfectly. There was a little whipsaw there, slight whipsaw, but this is a big move down below. So now you have, for the first time since 2009, right when the bear market was ending, you have the PPO clearly below the signal line, below the zero line. So uh, that's that caused the trend into question, but you can see price-wise the trend is still up until this trend line's broken. If that trend line breaks and the PPO is still below there, the signal line, then there's a good chance Costco has now embarked on a new bear market. CL, Colgate-Palmolive, another blue chip. I'm sure you guys know all these names. What do you say? There's a divergent high correction, in this big mega blue chip stock, a 15-16% correction. We have another divergent high so far that's been good for about a 8-9% drop. This was a very well-defined support level. The reason being, it was a big gap right there. Gaps act like magnets. When they're back tested from above, that's support, as it's been recently. You can see these are just intraday pierces below with the candles closing back up above. In most cases are right around it. And so far that support level is held. The question is, have these divergences played out enough already? And if so, your next objective long entry would be a test on this trend line. This is where you could have bought it. You could have bought it here. You could have bought it here. But if there's more to come, you look for a break, especially a daily close below that trend line. If that does occur, you're looking at least for a back gap backfill, move down to this level here. And again, then you have to really look at the daily or the weekly charts to kind of get an idea where this one's going. And here's a pretty decent support down here all the way. It's about $63, and that's about 13.5% below current levels. That's where the stock might be headed again if that support level there about 77 gives way. Couple more. Mondelez, nah, I don't. There's a little bit of divergence, but I'd rather see it come in. There's some support there. I'm not crazy about that one, so I'll move on. Kimberly Clark, KMB, bullish falling wedge. I like this one. I'll tell you why I like this one. You can see the potential divergence. It's not yet confirmed. This green line is a very well-defined support level. We have a gap right here. We have a lot of reactions. Reactions over here to the left. Again, this goes back 2 years. And now we've taken out that support. You might say, Randy, well, there's a stock. It fell to support, but it took it out. If you've noticed a lot of the trades that have been stopped out lately, it's a hallmark of this market. All these program trading, all the program trading you hear about with the big banks and brokerage firms and the big financial institutions, those algorithms they prey on the retail trader and other traders. So what they do is they have enough money to pull these stocks down. This is a very logical support level where a lot of longs would have stepped in and bought right there. And you also would have had a lot of shorts if that level broke, step in a short. So, had somebody gone here long, put a stop below, this is what I believe will be a likely stop rate. You pull the stock down a little bit above, you clear the stops, and then you go long and you gun it. And that's maybe what happens. If it's not, let's just say that support broke and the stock's going much lower. So you buy it around here, about with a stop just below the recent lows, around 116. Your downside is minimal. You're talking, 0.5%. You can put a 1% stop, maybe a 2% stop if you're stopped out. But if this stock does reverse and it regains this support level, this former support, now resistance level at about 117.13, that would be a very bullish technical event. You'd probably see the stock come back up here to at least the top of the wedge pattern and then possibly break out. And if it did that, you'd also confirm these bullish divergences, and that support would have been defended, especially on a weekly basis if it can do it by tomorrow. So watch KMB for potential reversal and a move back above 117.13 by the end of the week, or maybe even next week. We'll see. Let's see how it looks long term. I can play around with a lot of these trend lines. Again, this market, it's getting long in the tooth. You're already seeing, you had a divergence here on the weekly chart, and the stock has been moving lower since. And that's all the way back to, that stock peaked back in, you know, early to mid 2016. Looked like it had a double top high, and it has been moving lower since. So it is very possible that this sector and a lot of these stocks have already begun a new bear market. It's too early to say because they're too close to their highs, and there's a lot of work to be done. But again, define your time frame. You can game this thing for a bounce that might last just a few days, a few weeks, or even a couple months. All right, two more and then we're done. This video went a little longer than I wanted it to, but I'll wrap this up. EL, Estee Lauder. There it is, the divergent high back here. You can see the negative divergence. That was good for a nice drop, 23 or so percent. We had along the way, we started an uptrend here. The stock has a very well-defined uptrend line. We had a divergent high at this point. You can see the negative divergence shown here, and we got a correction. What I refer to as a tradable correction. It was, almost 4%. Now, you can see that pulled back to the trend line. Every pullback so far has been to the trend line, especially when it gets away from this trend line. It's a lot like using a moving average. There's indicators you can set to see the percent that a stock is trading above a certain moving average, and when it usually hits a high end of that extreme, 10%, whatever it is above a moving average, it comes back in. Same with the trend line. When you get too far away from a very well-defined trend line, you get a mean reversion, or you come back to visit that trend line. In this case, you had a wedge pattern here. You can see it. That probably showed well on the 60-minute chart. I'll show you the 2-hour chart in a second. And we broke down. You can see that breakdown has been impulsive so far. Little flagging action here, and I just drew this as a scenario to just show you this is what I think is going to happen with this one. At the very least, you have a trade back here, I believe, to the trend line, and then probably a reaction because we haven't visited that in a while. maybe that trend line goes sooner or later. I would expect a bounce, but either way, that's an objective trade. If you want to take a position there, you can also short it and put a stop above your entry or right at your entry and hope for a break of that trend line and try to get a lot more. When we look at the 2-hour chart on EL, it's pretty clear. A lot of stuff here. There's a trend line, a rising wedge. There's a breakdown, little correction. You could see the negative divergence at the highs foreshadowed that correction. And then the stock resumed its uptrend. And now we have, again, negative divergence. I've circled this. We have a potential cross. Um, I've also, these arrows right here will show you, if we go back in this is again a 2-hour period chart. Every instance that the stock has been oversold on this time frame so far, as these arrows show, were great buying ops. So we had a nice rally from there, became oversold, nice rally from there, became oversold here, nice rally from there, and once again we're oversold, and we're at trendline support. That trend line breaks, not just a little quick break, but a sustained break, an impulsive break, we could be headed lower. But you might get a bounce trade here before it breaks. And if it does break, then you flip back out to this daily chart and you say, okay, well, that's going to probably take us down here. And then, of course, if that trend line breaks, things get even uglier. STZ, Constellation Brands, bearish rising wedge just broke down. So here's one that looks clearly to be a short entry here, objective short entry. There's a rising wedge pattern, negative divergence, and when we had that divergent high, the stock fell about 17%. Now we have a divergent high, and we've only fallen so far about 3.5%. So this one's trading just below there. It looks like it's dancing on the 50-day moving average right now, which has done a good job of support. I'll show you that. I have a lot of these lines tuned down. So you see that yellow line right there? So far, that's contained the pullback. So when that 50-day EMA goes, STZ is probably headed lower. And my targets would be right here. That level is 191.41. Then if that gap is backfilled, which I think it will be, that takes you down to 186.28. And if things get ugly, then we're probably headed down here. You have another big gap to test from above, all the way down here at about 169.74. And again, the negative divergence tells me that there's probably more downside to come on STC. All right, long video, too long. I'll wrap it up here.